What if I told you that the future of investing isn't in tech giants or AI software, but in physical robots that are already changing our world right now? And the best part, you don't need thousands of dollars to get started. I'm about to reveal 3 explosive robotic stocks, all trading under $20, that could potentially transform your portfolio. But here's the catch. One of these companies is trading at just $1 right now, and it's been as high as $20 before. Stick around because what I'm about to share could be the opportunity you've been waiting for. Welcome to Stock Aura, where we uncover hidden gems in the stock market before they go mainstream. If you're serious about finding the next big winners in robotics, hit that subscribe button right now and turn on notifications. Trust me, you don't want to miss what's coming in this video. Drop a comment below telling me which robotics company you're most excited about, and let's build a community of smart investors together. Now let's talk about why robotics is absolutely exploding right now. We're not just talking about some futuristic fantasy anymore. These robots are operating in space, flying through war zones, and diving into the deepest parts of our oceans. The robotics revolution is happening right now, and early investors have already seen gains of over 500% in just 1 year. Yes, you heard that right, 500%. So the question isn't whether you should invest in robotics, it's which companies are positioned to dominate this massive wave of innovation. Think about it. Artificial intelligence has been the hot topic for the past couple of years, and many investors feel like they've already missed that boat. But robotics, this is AI taken to the next level. We're talking about artificial intelligence with physical bodies, machines that can work in environments where humans simply can't survive. We are witnessing something truly remarkable unfold before our eyes right now. The artificial intelligence revolution that everyone has been talking about for years is entering its next phase, and what most people fail to realize is that we are still in the very beginning stages of this transformation. The investors who can see this shift happening right now, who can understand what it means and position themselves accordingly, these are the people who stand to benefit enormously over the coming years. We are talking about the kind of returns that can fundamentally change someone's financial trajectory, the kind of opportunities that come around maybe once or twice in a generation if you are lucky enough to recognize them when they appear. There is a fundamental misunderstanding that I encounter constantly when I talk to people about the robotics market. Most people think about robotics as a single industry, a monolithic sector that either succeeds or fails as one unit. Nothing could be further from the truth. What we are actually seeing is explosive growth happening simultaneously across multiple different sectors, each with its own dynamics, its own drivers, and its own investment opportunities. We are watching space technology companies push the boundaries of what is possible beyond Earth's atmosphere. Defense systems are being revolutionized by autonomous capabilities that seemed like pure science fiction just a few years ago. Autonomous drones are transforming everything from military operations to commercial surveillance. Underwater operations that once required massive crews and expensive equipment are being completely reimagined through robotic innovation. This diversification across so many different high-growth sectors means that investors have multiple entry points, multiple ways to participate in this transformation, and multiple opportunities to find the right fit for their portfolio and risk tolerance. Today, I am going to walk you through 3 companies in detail, companies that have positioned themselves exceptionally well in these high-growth areas. These are not household names that everyone is already talking about. These are companies that are flying somewhat under the radar right now, which is exactly where the biggest opportunities often hide. But before we get into the specifics of these individual stocks, I need to set some very clear expectations with you because honesty and transparency are absolutely essential when we are talking about investments of this nature. These are not your traditional blue chip investments. We are not talking about stable, mature companies that pay steady dividends and move slowly and predictably. We are talking about high growth opportunities, and with high growth necessarily comes high volatility. 2 of the companies I'm going to discuss today are extremely volatile, meaning their stock prices can swing dramatically in short periods of time. One of them is literally a penny stock, which comes with its own unique set of risks and considerations. When you are dealing with higher risk investments, you always have the potential for higher rewards, but you also have the potential for significant losses if what you are looking for is safe, boring, predictable returns. If you want to invest in something that will keep you comfortable and let you sleep soundly every night without any concern, then I need to be direct with you. This video is not for you, but if what you want is to learn about companies that have the potential to double in value, to triple, or even to grow 10 times over the next several years, if you are willing to accept higher risk in exchange for that potential, then you need to keep watching, because this is precisely what we are going to uncover together today. Let me start by introducing you to the first company on our list, and I have to tell you, this one is absolutely fascinating from multiple angles. The company is called Redwire, and it trades under the ticker symbol RDW. I want you to think about Home Depot for a moment. Home Depot serves contractors and homeowners who need materials and tools to build and repair structures here on Earth. Now imagine that same concept, but instead of serving your local neighborhood, the company serves outer space. That is essentially what Redwire does. They build critical infrastructure that is necessary for space operations to function properly. We are talking about solar panels that power space stations, three-dimensional printers that can manufacture components in the zero-gravity environment of space, robotic arms that perform delicate operations that would be impossible for astronauts to do manually. These are not theoretical technologies that might work someday. This is functioning hardware that is operational right now. What makes Redwire incredibly interesting from an investment perspective is that they already have established relationships and active contracts with some of the most important space organizations in the world. They work with NASA, the premier space agency that has been pushing the boundaries of human space exploration for decades. They work with the European Space Agency, which represents the combined space ambitions of multiple European nations. Their technology is not sitting in a laboratory somewhere waiting to be tested. It is currently operating on the International Space Station as we speak, performing critical functions that keep that station operational. But here is where the story gets really interesting, and this is the development that made me sit up and pay much closer attention to Redwire as an investment opportunity. The company recently made a strategic pivot that expanded their focus beyond pure space technology and into the defense sector. They acquired a division called Edge Autonomy, and this division manufactures autonomous drones specifically designed for military applications. These are not consumer drones like you might buy to take aerial photographs on vacation. These are sophisticated military systems that are already being sold to the United States Army and other defense organizations around the world. Edge Autonomy has two main drone platforms that are particularly noteworthy. They call them the Stalker and the Penguin, and these systems are already generating real revenue through contracts with military customers. What really excites me about this acquisition is that Redwire currently has a backlog of approximately $356 million in orders. Think about what that backlog represents. It gives us incredible visibility into the company's future revenue stream. This is not speculative revenue that might materialize if everything goes perfectly. These are actual orders that customers have already placed, work that the company will be performing and getting paid for over the coming months and years. You might be wondering why I am so excited about a company that operates in two seemingly very different areas, space technology and military drones. The connection becomes clear when you think about what I call frontier robotics. This is a term I use to describe robots that operate in extreme environments, places where humans either cannot go at all or can only go with tremendous difficulty and risk. We are talking about the vacuum of space, the crushing pressures of deep ocean environments, radioactive zones where human exposure would be fatal, active conflict areas where human soldiers face constant danger. Redwire has positioned themselves brilliantly in this niche by developing expertise in both space-based robotics and Earth-based autonomous systems. Their robotics play in space involves sophisticated robotic arms that can manipulate objects with precision in zero gravity, automated solar panel systems that can deploy and orient themselves without human intervention, and other technologies that make space operations safer and more efficient. Here on Earth, their focus through the Edge Autonomy acquisition is on autonomous drone technology, and this sector is projected to grow exponentially over the next decade. Having drone platforms that are already certified by the United States military gives Redwire an absolutely massive competitive advantage. Military certification is extremely difficult to obtain because the requirements for reliability, security, and performance are so stringent. But once you have that certification, It opens doors not just to more military contracts, but also to countless commercial applications that can leverage the same proven technology. If you pull up the stock chart for Redwire right now, you will notice something very interesting. While many defense stocks and drone-focused companies have skyrocketed in value over the past month, Redwire is still trading significantly below its highs for the year. At one point earlier this year, the stock reached $26 per share. Right now, it is trading around $13. That represents a massive discount for a company that is successfully executing on its growth strategy, and it represents what I believe is a very attractive entry point for investors who have been waiting for an opportunity to establish a position. Let me share some numbers with you that really tell the story of what is happening at Redwire right now. Their revenue growth from the third quarter of last year to the third quarter of this year was approximately 50%. That is not a typo, and I did not misspeak. 50% year-over-year growth. This kind of growth rate proves that their defense acquisition is working exactly as planned and that they are successfully integrating these new operations into their existing business model. This is not just about buying a company and hoping for the best. This is about strategic execution and operational excellence. The analyst community has taken notice of what Redwire is accomplishing, and they are constantly revising their price targets upward as the company continues to hit its milestones. The consensus price target is around $22, which represents a substantial upside from current levels. Some analysts have targets that are even higher than that. I want to be clear about my expectations for this stock. This is not something that is going to shoot up overnight and double in a week. Think of Redwire more as a steady climber, a company that builds value consistently over time as they execute on their operational plan and hit their milestones. There are several key catalysts that investors should be watching for with Redwire. New contracts with Axiom Space would be significant because Redwire is already a primary supplier for Axiom space station development projects. Additional deals with the European Space Agency would demonstrate continued international demand for their space infrastructure products. Expansion of their drone operations into commercial security markets would open up entirely new revenue streams beyond military applications. Any major announcements around these catalysts could be the trigger that sends this stock significantly higher and brings it back toward those yearly highs we saw earlier. Now, I need to address the obvious question that many of you are probably asking yourselves. If the company is performing so well, if they are growing revenue at 50% year over year, why did the stock drop from its highs in the first place? The answer is actually quite simple, and it speaks to how Wall Street often reacts in the short term. Wall Street does not like uncertainty. When Redwire made the pivot from being purely a space technology company into having a significant defense and drone component, that created short-term uncertainty among investors. People were not sure if the company could successfully manage both divisions. They worried about integration challenges, about whether management was spreading itself too thin, about whether this was a smart strategic move or a distraction from their core business. But now that we are several quarters past that acquisition, now that we can see strong revenue growth and clear evidence of successful integration, that uncertainty is fading quickly. This is actually the perfect time, in my opinion, to consider establishing a position, because we are at that sweet spot where the company has proven its strategy is working, but before the broader market has fully recognized and priced in that success. Once everyone is completely convinced and the uncertainty is gone, the stock will likely already have moved significantly higher. Let us move on to the second stock on our list, and I have to tell you, this one is absolutely explosive in terms of its growth trajectory and the revolutionary nature of its technology. We are talking about a company called Ondas Holdings, which trades under the ticker symbol ONDs. I call this the Sky Play because they are revolutionizing autonomous drone technology in ways that seem almost like something out of a science fiction movie, except this is not fiction. This is real technology that is operational and being deployed right now. Picture this scenario in your mind. There is a box sitting in an empty field, completely unattended. Suddenly, the box opens automatically. A drone launches into the air without any human touching a controller. The drone completes a security patrol of a designated area or intercepts a hostile drone that has entered restricted airspace. Then the drone returns to the box, lands itself with precision, the box closes automatically, and the drone begins recharging so it is ready for the next mission. This entire sequence happens with absolutely no human intervention required. That is exactly what Ondas Holdings has created, and the demand for this technology is absolutely insane right now. These are not just surveillance drones that fly around and take pictures. Ondas has developed interceptor drones that can autonomously detect hostile drones, chase them down, and capture them before they can cause harm or collect sensitive information. In today's world, with geopolitical tensions at all-time highs, especially in regions like the Middle East and Ukraine, where drone warfare has become central to military strategy, this technology is in massive demand. Countries and military organizations around the world are scrambling to figure out how to protect their critical assets from drone attacks. Ondas has developed a solution that addresses this urgent need. This company is in what I call a hyper-expansion phase, and when you look at the numbers, it becomes immediately clear why I'm so excited about it. Over the past year, the stock has increased by approximately 500%. Let me repeat that because it is so important and so remarkable. 500% growth in 1 year. That is the kind of return that can completely transform a portfolio, that can turn a modest investment into something truly substantial. But the stock price appreciation, as impressive as it is only part of the story. What really matters for long-term sustainability is revenue growth, because stock prices can be volatile and can be driven by speculation, but revenue growth tells you whether the underlying business is actually succeeding. Ondas went from barely generating any meaningful revenue to producing $10.1 million in a single quarter. That represents a 582% increase in quarterly revenue. When you see growth rates like that, you are witnessing a company that has successfully transitioned from concept to execution, from potential to reality, from having interesting technology and development to having products that customers are actually buying in significant quantities. Now, I know exactly what some of you are thinking right now. The stock has already run up 500% over the past year. Is it too late to get in? Have I missed the opportunity? This is where things get really fascinating from a technical analysis perspective. Last week alone, Ondas appeared on the unusual options activity list twice, with massive spikes in call option volume that were around 150 to 160% above normal levels. What does this tell us? It tells us that the smart money, the institutional investors and hedge funds who have access to better research and more information than individual retail investors typically have, they are betting on continued growth. They are positioning themselves for further upside, and they are doing so aggressively. Ondas has developed a technology platform that they call Iron Drone, which is obviously a play on words referencing Israel's famous Iron Dome defense system. It is essentially a set-it-and-forget-it autonomous defense mechanism that can protect facilities 24 hours a day without requiring human operators to be constantly monitoring and controlling the drones. Even if global tensions eventually cool down, which hopefully they will, the need for autonomous security systems is not going away. The applications extend far beyond military use. Hospitals could deploy these systems on rooftops for perimeter security monitoring. Critical infrastructure facilities like power plants and water treatment facilities need protection from both hostile drones and other security threats. Corporate campuses, government buildings, ports, airports, the potential commercial applications are virtually endless. Right now, analyst consensus suggests about a 31% upside from current levels with a price target just over $17 per share. But here's what really gets my attention. The high-end estimates from some analysts are coming in at $25 per share. Remember, this was a 50-cent stock just a year ago. The investors who recognize the potential early and established positions at 50 cents have already seen truly life-changing returns. Their investment has multiplied 10 times over. The question that matters now is whether this company still has room to run, whether there is still upside potential for investors who are just discovering it now. Based on the revenue growth trajectory that shows no signs of slowing down, based on the increasing geopolitical demand for drone defense systems that appears likely to persist for years, and based on the unique technology they have developed that gives them a competitive moat, I believe the answer is yes, there is still significant room for growth. This is a company that identified a critical problem at exactly the right moment in history, developed a viable solution, and has demonstrated the execution capability to capitalize on the massive market opportunity in front of them. Now let us get to the third and final stock on our list, and I need to give you a very clear warning right up front. This one is the riskiest play we are discussing today by a significant margin, but it also has the potential for the biggest returns if things go well. We are talking about Nauticus Robotics, which trades under the ticker symbol KIT. This is currently a penny stock trading around $1 per share, but it has been as high as $20 in the recent past. That level of volatility tells you everything you need to know about both the risk and the reward potential here. So what exactly does Nauticus Robotics do? Think about robots that operate in one of the most challenging and hostile environments on planet Earth, the deep ocean. They have created autonomous underwater robots equipped with robotic arms that can operate at depths of up to 2,300 meters. These are not remotely operated vehicles that need a crew on a ship above controlling them with joysticks and watching video feeds. These are fully autonomous robots that can swim like submarines, navigate complex underwater environments, perform intricate tasks, and return to their base without any human intervention whatsoever. The applications for this technology are enormous and span multiple industries. Offshore wind turbines, which are becoming increasingly important for renewable energy generation, need regular maintenance and inspection. Oil rigs require constant inspections and occasional repairs to underwater components. Undersea communication cables, which carry the vast majority of the world's internet traffic, occasionally need to be located and repaired when they get damaged. Traditionally, all of these tasks required expensive ships with specialized equipment, crews of highly trained personnel, and often put human divers in dangerous situations with limited visibility and crushing water pressure. Nauticus Robotics is working to replace entire fleets and crews with autonomous robots that are safer, more efficient, and dramatically less expensive to operate. These robots are fully electric and untethered, meaning they do not need power cables running up to a surface vessel, and they do not need constant communication with operators above. They operate with true autonomy, making decisions underwater based on their programming and artificial intelligence systems. This is frontier robotics at its absolute cutting edge, pushing the boundaries of what is possible in one of Earth's last unexplored frontiers. Now, I need to be completely transparent with you about the risks here because they are substantial. When you look at the stock chart for Nauticus, it looks absolutely wild. You will see what appears to be an initial public offering price of $3,600, which seems completely insane, but that is not actually what happened. The stock has undergone multiple reverse splits that distort how the historical chart appears. In July of last year, they did a 1-to-36 reverse split, and then in September, they did another 1-to-9 reverse split. Combined, that is effectively a 1-to-360 reverse split, which makes the historical chart look distorted and confusing. Why did they do these reverse splits? The harsh reality is that the company is facing a cash crunch. They are struggling financially right now, and reverse splits are often used by companies to keep their stock prices above the minimum requirements for remaining listed on major exchanges. This is a company at a truly critical juncture in its existence. This is genuinely a make or break year for Nauticus Robotics. Last year, they generated only about $400,000 in revenue, which is almost nothing for a company trying to commercialize advanced robotics technology. This past quarter, that number jumped to approximately $2 million, which shows growth. But they need to accelerate that growth significantly to survive long term and prove their business model is viable. The company needs to demonstrate that their technology works reliably in real-world commercial applications and that it saves clients substantial money compared to traditional methods. Here is the potential upside scenario, the case for why this could still be an interesting speculative investment despite all the risks. If Nauticus can secure just one major contract with a large company like Shell, an energy giant, or any other major offshore energy operator, everything changes overnight. One successful deployment that proves their robots can safely and effectively perform underwater maintenance and repair operations could open the floodgates to dozens of additional contracts. The offshore energy sector is absolutely massive, worth billions of dollars annually, and if Nauticus can capture even a small percentage of that market, even just a few percentage points, the stock could multiply many times over from current levels. But I cannot stress this enough, and I need you to really hear this warning. This is a high-risk investment. There is a very real possibility that this company does not make it, that they run out of cash before they can prove their business model, that they cannot secure the contracts they need to survive. Cash-strapped companies in capital-intensive industries like robotics do not always make it. Many of them fail. However, for investors who fully understand these risks, who are willing to accept the possibility of losing their entire investment, and who want to take a calculated gamble on cutting-edge technology, Nauticus represents what we call an asymmetric bet. This is where the potential reward, if things go well, significantly outweighs the risk, assuming you size your position appropriately and do not invest more than you can afford to lose completely. If I were personally considering Nauticus, and I want to be clear that I am not telling you to buy it, I would think of it as a very small speculative position, maybe 1 to 3% of a total portfolio maximum. This would be money that I could afford to lose completely if things do not work out. But if the company does execute successfully, if they land those major contracts and prove their technology, that small position could grow into something quite substantial. So there you have it. 3 robotics stocks, all trading under $20 per share, each with completely different characteristics and risk profiles. Redwire offers steady growth with strong fundamentals, proven technology, and established military contracts. Ondas Holdings is in hypergrowth mode with proven revenue acceleration and massive market demand for their drone defense systems. Nauticus Robotics is the high-risk, high-reward play that could either disappear entirely or multiply 10 times in value depending on their execution over the next year. Before you invest in any of these companies, and I cannot emphasize this enough, please do your own thorough research. Read the financial statements and understand what they tell you about the company's financial health. Study the business models and make sure you understand how they make money. Evaluate the competitive landscape and figure out what advantages these companies have. Understand your own personal risk tolerance and be honest with yourself about how much volatility you can handle. These are not recommendations to buy. They are educational insights into interesting opportunities in the robotics sector that I believe are worth your attention and further research. The robotics revolution is not coming in some distant future. It is here right now, and it is creating investment opportunities that we have not seen since the early days of the internet boom in the late 1990s or the beginning of the smartphone era in the mid-2000s. The question is not whether robotics will transform our world, because that transformation is already underway. The real question is which companies will lead that transformation and create substantial wealth for their shareholders along the way. These 3 companies represent different ways to participate in that transformation, different points on the risk and reward spectrum, and different approaches to solving real problems with robotic technology. Thank you for taking the time to learn about these opportunities with me today. Remember that the best investment you can make is always in your own financial education, in learning how to evaluate companies, how to understand financial statements, how to assess risk, and how to make informed decisions. That is exactly what we are building together. Invest wisely, manage your risk carefully, and never stop learning and growing as an investor.